All right. The same trade setup on Euro USD. I've said earlier, go to the higher time frame. That should be the source of this trade setup. So this is a fair value gap, a monthly fair value gap, and into that monthly fair value gap, there's an old low which looks like a swing here. These are the things I look out for, which help me have some kind of confidence in the setup. So this is a fair value gap, not an inversion in this case. So on the higher time frame, it could be either an inversion fair value gap, it can be a fair value gap, it can be an old low in either the monthly, the weekly. In fact, at times I check the 3 months time frame, which helped me to frame this idea. Now I've said after checking, you go to the 4 hours to see if there's an inversion fair value gap invalidated. So we're going to check the weekly if there's anything so serious that we could see that could help us, trust the setup. So in this case, in the monthly fair value gap, there wasn't any serious old lows that we could see that would help us. But in fact, on the day I saw this trade setup here, my target wherein I was going to go out of the trade was this inversion, was this fair value gap here. So I'm adding this. This is a fair value gap, so that you will know where to exit your trade when you see this kind of trade setup. So once I see this, once I see maybe a hold low or a fair value gap, I'll be looking for a place to take off my profit. Do we understand? And I've shown us where I would have taken my profit. Supposing I trade this setup, I wasn't around. So price entered into it. It entered into the fair value gap on a monthly time frame, and is a weekly time frame. I've shown us that I would have taken my profit at that fair value gap. So if I see setup like this, is things I want to ride for a long time. So I usually go to look for it probably on Tuesdays of the week. I'm expecting that this should happen, and of course you'll see that in this trade setup, your take profit did not happen. My take profit did not happen the same week I saw it. It happened the next week. So, which also helped the market to form another trade setup. I'm seeing a whole lot of stuff here. I'm just showing us the simplified one that came out of a whole lot of study. You can do a whole lot of study on ICT concept. It will help you a lot to help your perception of price, and just bring in an aspect that I resonate with, and it's all nice. So let's go down to daily. Is there anything we could see on daily time frame that would help this perception? Yeah. Is there any? No, I'm not seeing anything. So just the normal stuff, the swing points, the old lows. So I just drew it out so that we can know. And then going to the 4 hours, which is where I like to see things happen. So right there. Now look at this. Just look at this. Look at this. After price had entered into the monthly fair value gap, look at it. It entered the long week. This fair value gap here, look at it, is a 4-hour fair value gap. 4 hours. Market came, price came, invalidated it. At this point, I'm interested in the market. I'm interested. Now, you can take your Fibonacci to raise it higher to this place. You should get it around 50% or 62% retracement level. So, of which it entered into it, and this market really did a nice dribble, but we're not consigned it. It was supposed to enter this area here, which is the beginning of that my target fair value gap, which I was going to take my profits on. But you could see that price entered into this fair value gap here, which is the nearest one. You could take your profit here after, starting your journey from here, which is a whole lot of pips. So, and then take your profit there. And then allow all of these things. You would have escaped all of these things if you had taken your profit here. Very simple logic that ICT teaches. It will tell you that take your profit at the nearest fair value gap, and taking it here would have, you will see that it would have paid off. But those with the heart of a lion, those guys, they would have held it here eventually. So it's all nice stuff. So far, fair value gap, he hit it. It came inside first. It still came and retested it, although it didn't enter. It came, retested, and then it went to take out this liquidity here, and of course, the market began to react from there. In fact, it will whip down, continue lower. I would have traded this area here. It broke this structure here. In fact, it's a 4 hours, broke the structure here. And then I was expecting price to enter into this fair value gap. It didn't do it. Although it entered it a little, but I was expecting it to come into the 62% retracement level. And I usually prefer the 62% retracement level because it's going to help me in risk management. I don't really like risking too much on this kind of trade. So coming for price to come to 62% retracement level is like, okay, it encourages me to use a good lot size and then manage my positions. And it's a whole lot. And I love this setup very well. I'm going to show us a whole lot of this. So let's go to 1 hour to see if there's something interesting. Now, going to 1 hour time frame. Look at it. I really love this. So in fact, I use my fib levels, take it up from here, landed it high to this place that shows the break of market structure, and bam, price was at 50% retracement level. And 50% retracement level, which also coincide with the inversion fair value gap on the 4 hours. Very important. Very important. So took it, and then you could see how much it had gone. It went higher and eventually entered into the target here at this junction here. It entered into this target here at this junction. Exactly. So this is a nice trade setup you could look for. Now, it's not everything. It's not this kind of trade, as you can see, is not what you see every week. You don't see it every week, but you could see it on different pairs every week. You don't see it on a pair for every week. You can see it on different pairs. So you want to go to different pairs. You want to go and check it, over and over again. It happens. And then using light concepts like, break of market structure, return to order block, return to fair value gap, for you to catch good moves. So you identify maybe an old low, identify where you are going to exit at, identify where you are going to enter at, especially at 4 hours inversion fair value gap. And then you could ride the trade probably from on Tuesday till on Friday or the Monday of the next week. It is a whole lot. And if you know how to frame it, if you know how to look for it, this is a nice trade to be in. It's a nice week. Have a nice time. Bye for now.